Let me now bring on board Devin Choksi, Managing Director of KR Choksi Securities. Devin, morning. Thank you for joining us. Devin, first a word on what happened yesterday.
Good morning, Nikunj. Well, I'm thoroughly disappointed, I think, the way in which the RBI came out with its policy. As if I think the monetary policy is the only way to control the inflation, and I think there is no way in which I think the inflation can be controlled otherwise. Is the signal that they have given. Even though they wanted to give this particular dialogue or peace of mind to the government that you must take fiscal measures, I think this is not the way in which I think let the growth down in this kind of a manner, because what I'm apprehending is now that going forward, industry might seriously suffer in absence of growth, and you might probably see, I think, consequential problems coming in to corporate sectors. With the lower growth, lower profits are going to be hitting the corporate sectors, and in turn it would have the consequential impact onto their economic fundamentals, because the tax collection will dip very significantly. So all of these are not giving me good feeling. It's, I think, a very nervous feeling at this point of time. I would think that instead of, I think, going in for a little bit harsher words, I think instead of going in for, I think, the show on the presidential election, at least the government should now resume the business and start taking some of the corrective decisions to correct the fiscal policy situation, and probably, I think, bring the economy back onto the track and let not growth get compromised. So this is what I think I have to add. Anyway, I think the sentiments are getting weaker at this point of time. Individuals and the investors, I think, from the fund side, they are not very keen to allot funds to India as well. That is also giving a weak feeling, because yesterday after the policy measures, I think when we ended up talking to some of the investors and the funds, they clearly said that, I think, no to India at this point of time. So that also gives, I think, very negative feeling. I would wish that the market trade in this particular range and consolidate for some more time before the sentiment starts improving and some policy starts coming up. Maybe, I think, as of now, I would think that 4900 and 5200 would be the range in which the market would trade, and any move above or below would make the direction thereafter clear.
Devin, would you say in terms of domestic triggers currently, monsoon as well as the political changes in terms of who's going to get the finance ministry and who's going to head that are sort of the key triggers right now?
Let me say that I think whoever gets the finance ministry, they will have to act very fast. I think whether it is Dr. Manmohan Singh who assumes the finance ministry portfolio, or Mr. Chidambaram who assumes the finance ministry portfolio, anybody, a competent person coming into this particular position, they will have to move very fast. I think just by sheerly allotting the portfolio to a large figure would not help till the time, I think, they start taking actions. So certainly, I think one would expect that at least, I think, the first thing should go right with a good name, and second thing, I think they should start moving. If that does happen, then certainly, I think, there is a ray of hope at the end of the day. Otherwise, I think the outlook downgrading done by the rating agencies could very well result into the rating downgrade, and that could mean that rupee can probably go beyond 58 and can go in territory of 60. So that gives, I think, a very wrong signal at the same time. Of course, I think one is expecting that the things would go normal, but I think at this point of time, situations are not appearing so, because people are busy fighting for the presidential elections.
Devin, what is your thoughts on banks, and would you remain wary of banks with high NPA issues?
Well, I don't think that the NPA issues are going to go out of control unless, I think, the situation turns really bad in the economy. Till that point of time, I think most of the banks which we have selected in the portfolio, they are likely to, I think, show, I think, resilience, a good performance at the same time, because most of the corporate sector to whom they have given the loans, I think they are basically, I think, monitoring them well, and I think things are not going out of control for many of the banks. And I am referring to the likes of State Bank of India. I am also referring to ICICI Bank, Axis Bank, IndusInd kind of bank, where we have largely the investment interest also built in. So I'm not too sure, I think, whether the NPA issue would probably jump up at this point of time. And after listening to the commentary of the management of these banks yesterday, I think I'm more convinced that I think it is not going that way around. Of course, I think the banking sector looks, I think, reasonably okay if the situation turns normal. And if the assurance is coming that on July end, when the RBI once again take a look at this policy, and if they bring the rate cut, at that point of time, I think the banking stock should once again look up. But as of now, we stay a little bit cautious on banking stocks, and probably in fall would like to add more into the portfolio, not immediately as of now.
Devin, why are metal stocks suddenly outperforming at a time when, in general, the global growth scare is back? Commodity prices, they have corrected. They've corrected by about 10-15% in last 2 months. Stocks like Hindalco, Tata Steel, Sterlite Industries, all of them have recovered quite smartly from the May's low.
I'm surprised too at this point of time. On the contrary, I think on fundamental side, if you look at it, I think the outlook for the metal stocks looking little bit weak on the profit side, because generally when the oil prices fall, that is the energy cost comes down, I think along with that the metal prices also comes down. And in such kind of a situation, when the prices comes down, you have the inventory loss, at least I think for 1 or 2 quarters, I think, which need to be borne by the respective companies. So as I see it at this point of time, some of the metal companies may have to incur part of the inventory loss in coming period, at least in next 1 or 2 quarters. And good news, of course, I think is getting discounted at this point of time in the price, but actual performance of the companies would probably come in the second half of the financial year, because the energy cost is coming down. The market is little bit more confident that going forward the metal stocks probably would have better profit performance, but at least in near quarter 1 or 2 quarters, as I explained, I think it may not be so. So we'll have to wait and see. Maybe market is giving the reaction to this, maybe some amount of short covering is also taking place in these counters, but otherwise I'm not too sure whether the profits would increase in 1 or 2 quarters from now for metal companies.
700 rupees for Reliance Industries. Devin Choksi.
The simple reason that on the one side the potential of this particular company always remains high. On the other side, I think the overhang of the issues is certainly, I think, taking its toll onto the stock and the stock prices. So from a near-term point of view, certainly things are not looking as pretty. Of course, I think in last 2 months we have seen the relative stability in the GRMs, and that should give the refining performance little better in this particular quarter. But one is not totally sure till the month of June gets over for the refining side. On the petrochemical side, the performance of the business, I think, is going to be, I'm not saying extraordinary, but it's going to be marginally better than the last quarter, as I would like to put it across. Maybe I think the volume is not growing. That is where I think the concerns are. And the exploration side and the gas side, I think the issues are very well known. So I'm not too sure, I think, whether in immediate terms there are any triggers for Reliance. But potential for Reliance always remains high. Anytime I think this dark cloud gets over, probably I think this stock should perform well in the marketplace going forward.
Devin, I don't know if you've had the chance, but Veritas has now initiated a coverage on Reliance Communications with a sell, and it's a really appalling target that they've actually slapped. 15 rupees per share. They say that there are concerns on monetization of Reliance Infostel, which is only at a valuation of 12,500 crore rupees. They're skeptical about the meaningful reduction in the leverage as well from the flag IPO, and a lot of concerns really probed up.
I don't know, but I think after going through various other reports, I think which this company has come out in past, I think they have made a mockery of themselves, honestly. I think basically they are trying to do witch hunting for certain issues for which I think there is no relevance in current times. I'm not too sure about, I think, what exactly the reservations are for Reliance Communication, but to my mind, I think having built this particular asset base and having got this kind of subscriber base, if that is the kind of valuation that is assigned to this company, certainly I think it could become a prime takeover target, more from the point of view that the connectivity is already established with the last mile. And obviously anybody who wants to offer the 4G services, they may probably find a lot of merits with these subscribers that the company has already secured. So I'm not too sure whether that kind of a ridiculous valuation is justified for this company. But anyway, I think I would reserve my comment on that front, more because I think the reports which have come from this organization has held, I think, hardly any relevance to anybody's on the fundamental side.
So at 65 rupees, will you be a buyer in Reliance Communication in your personal portfolio? If yes, why? If no, why not?
Well, I think telecommunication stocks in general we don't want to buy, Nikunj, for a simple reason that I think it is having too many short-term negative trends emerging for them, and probably headwinds are very, very strong on that side. So certainly we don't want to buy into any of the telecommunication stocks which are in the voice telephony. If the telecommunication business has to be looked at from the future point of view, it should be, I think, data business, it should be mobile commerce business, it should be content and advertisement business, I think, which comes along with. In such kind of a situation, I think not a single company is ready to roll out this kind of a business model as of now. Even when Reliance comes out, Reliance Infostel comes out with this particular business model, they are not going to be a listed company, it will be part of Reliance Industry. So I think I'm not too sure whether we'll allot any money to telecommunication for the voice telephony purpose. According to me, voice telephony has lived the the best of the years as far as their business is concerned.
Devin Choksi, for FY13, Infosys has guided for a minuscule early double-digit growth. Do you expect that Infosys Technologies, given the way how forex volatility has moved in the current quarter, they could cut their guidance further?
Well, I think it can't be ruled out, I think for sure, because the way in which the currency movement is currently, and for anybody to take a very clear view on this currency is always going to be difficult. Generally, we believe that in a falling rupee scenario, I think the companies end up getting the kind of a gain. I think generally calculation says that I think every $1 a fall probably I think results into the around 20 basis point improvement into the bottom line. But in a volatile scenario like this, I think that may not come true, and that's where I think the people are more skeptical. And this time around, I think the equation is more skewed because of the European currencies volatility, and that's where I think one is not totally sure. In case of Infosys, of course, I think the 40% kind of a revenue certainly I think would be coming through the dollar currency value, and the rest of the currency values would contribute to the later. Anyways, they have the hedging policy in place, but still I think you would not get the advantage of the depreciating rupee in their favor for sure. How much it could affect the bottom line, I think one will have to wait and see, because it's difficult to predict and calculate in such kind of environment.
A month ago you were extremely bullish on Infosys, Devin. What has changed in the last 1 month?
Yes, I was bullish more from the point of view that the way in which the prospects are available now for Infosys in the European territory, I think it is making more case for Infosys to go and do the inorganic growth, and that's what I was a little bit more bullish about at that point of time. And otherwise, I think on the normal working front, organic working front, I think I have been maintaining my views that I think not much of a growth can be expected. And I still maintain that the way in which the prospects are now available for Infosys kind of a company to acquire them, definitely I think it would make some sense for them to go ahead and buy them. Of course, I think they may be stopped at this point of time from the current situation in Europe, but certainly I think it cannot be permanently stopped. Probably I think they will go ahead and acquire some of the prospects which are available in European territory. We'll have to wait and see, and I was relatively bullish on that aspect.